The 920 strategy is a trend continuation strategy. Similar to ABCD patterns, this strategy helps you get into a trade after it's picked a direction for the day. Many traders struggle with FOMO, trying to catch momentum when something makes a strong move to the upside or a weak move to the downside. The 920 strategy is a way to combat FOMO, get into a trade for the continuation, and catch a piece of the pie. A lot of the 920 trades that get mentioned in the chat room tend to be long positions, but I'm going to show you a trade taken by Brian on Boeing on May 9th that was to the short side, to show that this trade can really be taken in either direction. Before we review the trade, here's the criteria we're looking for. A strong move at the open or beginning of the day. The stock has picked a direction. We don't want anything that is just chopping around and not going anywhere. A pullback to the 20 EMA on the 2-minute chart. This piece is important as this strategy is built only for the 2-minute chart, so be sure you're looking at that one. Other criteria includes a little bit of room between the 9 EMA and 20 EMA. This is for partialing purposes. And the stock is making a normal pullback, not an aggressive, volatile drop or bounce towards the 20 EMA. This is too risky. A couple things to note. This strategy is not built for low float stocks as they can be too volatile, and it is only for the morning session, typically between 10 a.m. and 11 a.m. when stocks make a pullback, sometimes a little past 11 as you'll see in the upcoming trade, but never in the afternoon session. Here I have Boeing queued up from May 9th. Notice how I'm on the 2-minute chart. Again, this is an important part of the strategy. I want to point out that this stock did have a strong open, and typically we would be looking for a pullback to the 20 EMA for a continuation. The 20 EMA on this chart can be seen in orange, while the 9 EMA on this chart can be seen in blue. Now on this day when Boeing pulled back to the 20 EMA after making a move at the open and finally bounced off of it, it was too close to the 9 EMA for this strategy to be valid. Again, we want a little bit of distance between the two. But what you'll notice is Boeing set a range during the morning session. Once this range broke, it chose a direction and began trending to the downside. Notice how smoothly it is following the 9 EMA, again, the blue line. While it's moving, we're looking for a pullback to the 20 EMA. When we get to that pullback, we have two choices. We can enter immediately as it touches the 20 EMA, or we can wait for it to show signs of stalling and come back down. So once we're in a position, we will put our stop above the previous candle. We want this to be somewhat tight since our first partial will be at the 9 EMA. Once we get to the 9 EMA, we'll take a partial. And then we'll continue to ride the trend to any significant areas of support and resistance. Half dollars, whole dollars, and so on. This strategy is very simple, and it's a great way to get into a trend if you've missed the initial move. If you're looking for a trend continuation strategy, we recommend giving this one a shot. You can test it out by using the replay simulator at tradingterminal.com.